Hey guys, before we get into the episode, the best way to support the channel is just by liking and subscribing to the YouTube channel or leaving us a review on Apple Podcasts or Spotify. It really helps us get more guests, allows us to bring you guys better information, which I know you guys love, and it helps you guys make better decisions with your real estate transactions. So if that interests you, please do that down below. Also, if you are thinking about making a move anywhere from Toronto to Hamilton and some of the surrounding areas, you can book a free call with us down below in the first link in the description. We're happy to go over your situation and just honestly see if we're a good fit for you. If not, no hard feelings. We're just here trying to help podcast listeners through a tough journey. So yeah, if you guys want to do that down below. All right, guys, welcome back. It's just going to be me today. Brooke is just getting back from a trip in Nashville. The oligopoly of Canadian Airlines had her stuck in Nashville. It was her 30th birthday last week. So if you haven't wished her a happy birthday, go ahead and do that. But it's just going to be me today. I just felt like I needed to get a podcast out there. It has been crazy the last couple of weeks, from everything with the Donald Trump almost assassination there, to Canadian inflation, to housing starts. I'm going to try and talk about as much as I can today regarding all those things. So yeah, firstly, super happy that Donald Trump did not get assassinated. I think that would have been horrible, not only for the American economy, but for us. You know, they're our big brother. We're very close to them, and they're our allies. To have a presidential candidate get murdered like that would have been horrible to see. Would have been horrible for even young kids to see. And just the backlash of a civil war in America would have been horrible. So I'm not going to get into that, but just some quick thoughts off the top of my head. I'm glad that he's okay, and hopefully they tighten up that security and that gets better going forward. So anyways, let's get into the Canadian inflation rate. So June's consumer price index inflation data showed a welcoming sign for Canadians hoping for interest rate cuts next week, according to some of the country's top economists. Statistics Canada said Tuesday that inflation slowed to 2.7% last month, which was June, a noticeable bounce back from the surprise 2.9% increase in May. The dip was largely due to the slowdown in gas prices, which climbed 0.4% year over year compared to 5.6% in May. Shelter prices also dropped during this month. After the scare in May, economists believe the Bank of Canada now has the green light to make another interest rate cut next week. So markets are definitely pricing in a cut next week of 25 basis points. I love to go over this because a lot of people think that the government is controlling rates, which honestly they do, but also the bond market controls rates as well. These traders trade off not just Canadian events, but world economic events. And that bond yield that we see, the Canadian 5-year bond yield, is a reflection of the fixed rate. The overnight rate is what the Bank of Canada controls. We saw last time they dropped 25 basis points, and honestly, not much happened. It seemed like there was this buildup that once the Bank of Canada drops the overnight rate, all of a sudden, all these buyers who were on the sidelines were going to flood into the market, and we were going to see multiple offers again. It would have been impossible to get a house. Realtors and mortgage agents were going to make all this money hand over fist again, but that's not what has happened. Again, Canadian markets are different everywhere. They're very local. So in Toronto, what we're seeing is the number of sales down year over year, and inventory is rising, especially in the bleeding condo market. Condo investors are definitely hurting, and I'll get more into that later in the next headline that I'm going to read. But that's what we're seeing, right? We're seeing cash flow negative investors cash out. I was looking at a sale where someone bought it in 2019. It was in the downtown core, and they sold it recently, so about 5 years later. And they got principal pay down, obviously, but they basically, after they paid commission, the upgrades they did to the unit, this condo was basically flat over a 4-year period. So investing in real estate and actually like buying a primary residence, it is actually important to look at location, inventory, demographic. It's actually important if you're looking at it from an investment standpoint, right? Like, it would actually kind of suck to see the house that you bought trade sideways from 2019 when you could have bought something in Oakville, Burlington, Hamilton. And for the most part, since 2019, a lot of those houses have been up in value. So what we see usually is that people kind of live in their house in Canada for 5 years, they sell and they kind of upgrade. I've helped a lot of people over my career do that. They started at a condo or a townhome, and the condo buyer moves up to the townhome, and the townhome seller then moves up to the detached home until they kind of get that forever home eventually. It was a little different back in our parents' day where they would buy that wartime bungalow, they'd live there forever, and that never changed. But yeah, what we're seeing is kind of this flat growth, right? And with mortgage renewals coming up, I think what we're going to see is that people are going to stay in their homes a lot longer than what they did in past years, which ultimately means less money for these towns and these cities, right? On land transfer tax, and the municipality, the province of Ontario is going to have less land transfer money. So where does that money come from? I'm not 100% sure, but I guess we'll see where that money is going to come from. Because if less people have the opportunity to move because it's not making sense because their investment they're either down on, ask a buyer from the peak of 2021 and 2022 if they're going to move in 5 years. Well, unless the market really, really rebounds above where they bought the house from, right? Like you can't really go back to where you bought the house from without making a loss because of the fees that are incurred, right? You have the real estate fees, the lawyer fees, the land transfer fees. It's very expensive to sell a home. So you have to be in a very positive equity position to do so. And that's not what I foresee happening anytime soon. Also, what a lot of people did back in the day, which made sense, was to take a cheap credit line on their house. It's called the HELOC, a home equity line of credit. They take that home equity line of credit because they built so much equity from their home because prices went up so much, and they went and they bought another investment property. We're not really seeing that now, right? Because people are either negative equity or they don't have a lot of equity. Even if an appraiser goes in, they might say, hey, it's pretty much at the same level that you bought it, or you might be up 2, 3, maybe 6%. There's not enough equity to take out of this home to then go purchase another home. Look at the pre-construction market, the pre-construction condo market in Toronto, and I believe Vancouver. I'm more focused in Toronto, so that's why I say this, is that market is completely dried up, right? They aren't making enough sales where home starts are a thing, right? They're not making enough money where they can actually start to build because they have to sell about 60% of the pre-sales to get the funding from the bank to get the green light to start building. So that market has taken a big hit, is that pre-construction market. And let me talk about this here because we always hear about politicians talking about how many houses they're going to build, right? We're going to build 3.8 million homes. We're going to save the middle class. XYZ, you hear it all the time. Canadian construction of new homes is falling at the worst possible time. Nearly every government in Canada at all levels and all political stripes say they want more housing built. Well, new data from the Canadian and Housing Corporation, which is CMHC, shows the opposite is happening. So what happened? Housing starts. The CMHC defines it as the beginning of construction work on a new home. That fell 9% in June from the previous month across the country. The picture looks even worse when you zoom in on the data. In the country's most expensive markets, Toronto and Vancouver, starts fell 37% and 13% respectively. Why it matters? Canada's already not close to hitting its targets for building enough new homes to meet demand, and now falling further behind. The CMHC estimates that around 900,000 new homes need to be built every year until 2030 to make housing affordable. Their latest data shows we're on track towards 247 starts this year. So that's incredible of a miss, right? You have 247 starts this year versus the 900,000 that we so-called need. What is happening? Well, higher interest rates are the main culprit. They have reduced the buyer demand and made it more expensive for builders to borrow money for projects. Sales in some categories like pre-construction condos, like I just touched upon in Toronto and Vancouver, have been crushed by higher rates, falling to lows not seen since the 2008 financial crisis. There's very little interest from investors from pre-construction condominiums. Chris Spoke, founder of real estate developer Toronto Standard, told The Peak. Developers are delaying their launches and even canceling projects as their pro formas no longer pencil. Bottom line, policy makers are spending plenty of time talking about more homes, but that's not translating into shovels into the ground. So yeah, he pretty much hit on the nail. Like the data and the numbers don't lie. Every politician's out there. Trudeau's coming on, the housing minister's coming on, Sean Fraser saying, we're going to build more housing. We have this housing accelerator fund and XYZ. And That's not happening. It's just we're not getting homes built. And this is the issue. Another issue that I want to touch upon is the type of housing that's getting built. Peterborough, it has 100,000 people that live there. Peterborough built more 3-bedroom units than all of the city of Toronto. The most popular unit, I believe, in Toronto was a bachelor pad. It was a bachelor unit, which does not have a bedroom. So we're building the wrong type of housing. If we want millennials to have children, if we want our population to grow other than just through immigration, and we want to, really appeal to younger people and younger voters, we need more housing that has at least two bedrooms where a couple can be in one bedroom and they can have a baby in the other. It's just not happening, right? You're not going to have a bachelor unit. You probably can't even live with another person in a bachelor unit and feel confident and comfortable that you are going to go and have a family. I was on TikTok and I saw a realtor from Brampton who went into a listing appointment. Goes into this listing appointment. There is 19 international students, 19 international students in a 3-bedroom townhome. Like, could you imagine being the neighbors? This is so far gone and so horrible that you have 19 people coming to Canada to study and they are living in a home. Like, this is not what it is here. This is not what Canada is. Like, you can't have 19 people living in a townhome, right? It's just, you have too many people coming into the country and not enough housing. It's just the harsh reality. It just is the only thing that makes sense. It's too much and it needs to change. We still need to build homes, and we need to build homes for missing middle and not these bachelor condo units that investors are buying, and they're now cash flow negative. So no one's even buying them anymore. It just doesn't make a lot of sense right now. And all the millennial voter base and the Gen Z voter base, and even some of the boomers, I know they want their kids to have homes, right? They want their kids to be close to them. They want to be close to their grandkids. Everyone is saying the same thing, is that we need housing, but we need more housing and we need better housing and affordable housing. But is it just they don't, they just want to tell us and try to win our vote and then nothing changes, right? That's what it feels like right now for a lot of millennials, is that we just don't have what our parents had in terms of housing. And I know a lot of older people like to say, well, we had 19% interest rates. Yeah, well, housing was only 2 to 3x your income. Now it's 8 to 10x your income, and even worse in some places, right? So it's just not, when you look at the median income of Canadians, and especially young Canadians, it's just, to go buy a house is so much more expensive. And that's why the rental pool is so high, right? You have these, so-called white collar jobs where these people are supposed to be buying homes, right? Their salaries are good enough, but they can't afford it. So then they're pushed into the rental market, which then hurts the person under them. Not to mention, you had over 2 million people come into Canada in the last 2 years, and that exceeded the province of Manitoba and Saskatchewan combined. So you have more people coming in than provinces, right? No wonder we have this crazy housing shortage, and people are upset and they want change. I saw recently that a poll was done and it showed that Pierre Poilievre would have a super majority if elections were held today. And in second place was the Québécois. They were in second. That's a big change from previous election cycles that we've seen. So it's obvious that people want change, and people really do think that the goose is kind of cooked here. So another quick story I want to touch upon is Guelph University. They let in a bunch of international students, right, without a housing plan. So there were students going there. It used to cost about $500 a room in Guelph as a student, which when I went to university, which really wasn't that long ago, right? I think I graduated in 2015. A room was, 500, maybe $700. Even a condo unit, right? I had a condo unit with a buddy of mine, and we both paid $700, and we had a parking spot. We both had our own bathrooms. It was a new build, and that was the going rate. Now in Guelph, right? It used to be $500 for a room. Now it's $1,200 to $1,300 a room. And there's kids going to school, right? Doing the right thing, going to get a degree, and they have anxiety and worry about where they're going to live because there's not enough adequate housing. And the federal government is getting involved, but they need to definitely make sure they hold true to this promise and not allow these institutions to take advantage of enrolling too many students for profit and leaving people living in tents under bridges. It's just a sad reality, but that's what we're seeing. And I hate the negativity here, but it's just the honest truth is that we as Canadians need to stand up and just say, hey, enough is enough, and you really do need to get out there and vote for what you do believe in, and get involved in a way that you can try and have a meaningful impact. Um, so let's touch upon the next topic here. Supply in Canada's property market surges as mortgage renewals loom. With many Canadian homeowners facing a sharp rise in mortgage payments, many of them have decided to bail, resulting in the highest number of Toronto housing units for sale in more than a decade and signaling a big drop in prices in the coming months. In Toronto, a city where 2/3 of the country's condominiums are sold, considered a bellwether for other big city metropolitan areas, inventories have pushed past highs reached 10 years ago, data showed. At the same time, sales have lagged. Fueling the surge in available properties are homeowners and investors who bought houses and apartments 5 years ago at record low mortgage rates, aiming to grab a piece of Toronto's lucrative rental market. But those mortgages are now coming up for renewal in an interest rate environment starkly different than it was 5 years ago. Mortgage rates are sharply higher, although the Bank of Canada has recently started to guide them down. This is from Dan Foch. He's a friend of the show and, very, very smart realtor out there. There's just limited willingness to lose money, said Dan Foch. It seems like nobody has really adjusted their expectations to a market in which they aren't going to make a profit, he said. This is what we've been talking about on this show for sure, is that everyone just keeps saying, well, real estate just goes up. And maybe real estate does keep going up, right? No one has a crystal ball, but maybe it does continue to go up over time. But the issue and what we saw in the 90s is, can you hang on long enough to see those gains, right? Can you service that mortgage at a negative cash flow long enough to see those gains in the future? Or is that not going to happen, right? That's the big question, right? Is there going to be a bunch of people coming to the market with their investments saying, hey, I forfeit, I'm ready to take a loss on these properties because I just can't work a second job or third job to pay this mortgage off. It's just not worth it to me anymore. Also, with the pre-construction market, a lot of assignments are coming in low. A lot of people haven't made the kind of money that they thought they were going to make. And now they're trying to close on these properties, and the appraisal is not even close to what they paid for it. So they're going to be at a loss, not only just a loss, but they will get sued by the builder and most likely will lose because they signed a binding contract. So there's a lot of moving parts in this market right now. What we are seeing across the country here is Canada's top real estate market seeing listings shoot up. So what we saw is home sales in Canada are down 9.4%. New listings are up 2.9%. This is for all of Canada. And the MLS home price index is down 3.4%. Where it's the highest is in Toronto and Vancouver. Home sales in Toronto are down 16.9%. New listings are up 13%, and this is year over year. And the home price is down 4%. We go to Montreal, home sales year over year is up 6.4%. New listings are up 7.4%, but the price of homes is up 4% as well. Vancouver, home sales are down nearly 20%, while inventory has risen 7.2%, and prices have pretty much remained flat. Calgary, home sales are down 11%. New listings are down 2.5%, and prices are up 8.6%. Edmonton, 7.3% for home sales. Prices are up 7.1%. So what to grasp in this chart and in this picture is that real estate, it's hard to give it a blanket term, right? You have a ton of migration to these other provinces. And that's kind of a bit of a leading indicator of people are kind of leaving these big cities for housing, right? They want to raise a family. People are like, I can't do it here anymore. I'm done making excuses. I'm going to go to another province because I can get cheaper housing. Look at Toronto right now. I live down here, and it was a floody mess yesterday. Roads were closed. The DVP was flooded. Not only that, but we're seeing a lot of people leave Toronto. So net domestic migration, number of persons by age leaving Toronto. The blue graph here is under 45. almost about 70,000 people left Toronto, 45 plus. Another about over 20,000 people left Toronto. And what you're seeing in Calgary is they're gaining 20,000, in Edmonton about 15,000. Also, what you're seeing is Montreal and Vancouver losing young people as well. So young talent is leaving these big cities, and maybe for good reason, right? Maybe they're leaving because they're looking for more affordability. They're looking for a better life, and they want a house. A lot of people want this Canadian dream of owning a home, and it's evident in these numbers. So, yeah, that's kind of a bit of a quick roundup in what we're seeing today in the Canadian real estate market. We're probably going to see a cut next week of 25 basis points. Again, it doesn't do much to the mortgage. It really only gives relief to variable rate holders. Keep your eye on the bond yield. If that starts to drop, then fixed rates are dropping, and that could maybe lead to a bit more of affordability. But with renewals coming up, I think that more Canadians are going to tighten their pocketbooks. They're not going to spend as much money in the economy. We're going to see that unemployment rate most likely tick up because of people not spending money. And yeah, it's kind of like a trickle down system, right? If you're servicing more interest on your mortgage or even more principal on your mortgage, but most likely it's more interest, you have less money to spend in the economy, going out for dinner, going on vacations. And that trickles down. It starts to force companies to lay people off. What we did see in the US is that we saw some soft economic data. It's now projected that in September, they will have a 25 basis point cut in their federal funds rate. So yeah, we'll keep an eye on that and keep you guys posted. We'll see what happens after the July meeting with Tiff Macklin. If he does end up cutting, it seems like in percentage terms, it's pretty much a done deal. But hey, you never know what could happen. We will definitely keep you guys updated on what we see in the market. But right now, it's slow. It's summertime, which is historically so. So I think we just really saw an early spring market this year. And then I think that we'll continue to kind of see a slowdown come fall into December. There's a lot of economic uncertainty out there, but definitely in the summertime, people aren't that interested in real estate. They kind of go on vacation and they're enjoying their summer and playing sports outside and seeing some friends. So that's kind of the trend that we're seeing right now. But as always, guys, thanks so much for watching. It was a solo episode today. We'll get Brooke back as soon as she can. But we appreciate all the support. Again, if you feel like booking a call with us, you want to talk real estate, even if it's out into the future, we're happy to chat with you and give you the best advice we can during this time. And you can see if we're a good fit for you guys. And yeah, if you can support the show by liking and subscribing, just helps us get bigger guests on. People see the subscriber count and they're willing to come on and have a chat with me and Brooke. And yeah, we just really appreciate it, guys. Hope you have a great rest of your day. Take good care, and we will see you guys next week.